Hey, what's up, everybody? Just wanted to come in here real quick with a video, and I say real quick and watch it's like an hour, 2 hours long. Uh, no, but really, I try to do a fast one today. We can see XRP starting to break out of some of these candles, and I think that's pretty important, obviously, right? So I think we're gonna get a little bit higher of a move. And what I'm targeting in the short term here on a retracement is getting to this 702 area and breaking above it. I mean, that's what we really want. And we're not so far away, right? About 1 cent, 55 cents, right? So I think, yeah, that's what I'm looking at. And for me, when I look at XRP and I compare it to like Fetch, I mean, wow, look at Fetch. That is an amazing move. I mean, and the reason why I'm sort of excited about it, right, is because of the way it corrected. And this is what I've always been trying to emphasize in this channel is three-wave corrections. If you see a bullish trend and a clear three-wave pullback, that's the time to fire a bullet, right? Obviously not financial advice, but for me, that's my time, right? And I think, something like this, but you want to be careful, right? Because this C wave, it's all about mastering the C wave, right? So, or the Y wave. In this case, it looks like it was a Y. We had boom, 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 right? Boom, 3 down, 3 up, right? And then 3 back down. And then what happened here? We started building, some higher lows, but more importantly, we were starting to react to this wick here. So this to me looks like a solid bottom, right? You can see a base right in here. And if we look, you can also see, if I zoom in a little bit here, sort of, you're sort of making these valleys, sharp valley down, 1 valley, 2 valleys, right? I mean, that's an inverse head and shoulder in my book, right? You want to wait for confirmation. So, but for me, I think dollar cost averaging is the best strategy, right? Because you don't know exactly where, but you want to build a position because you're not looking at the bottom price, you're looking at the next move to the upside, right? So all of that area, right? So just real quick, we have an impulse, we have a 3-way pullback, we have our base, we have what seems to be a diagonal right here. Let's see, we got a 1, 2, 3, 4, 5. Look at that. And a 3-wave pullback, a breakout, and then you're not even coming down to backtest, really. You're just kind of flagging out in here. Marked up again, ABC, that's a flat right there. And then continuing to just beast mode its way up. So Fetch, right? Obviously, what is this? Well, to me, it looks like a 4th wave. And ever since we were down here, you can go back and check the videos, I was bullish on Fetch, and I'm still bullish on Fetch. But who cares? It's not about Fetch. It's about the market. And we're bullish on the market until this happens, which is the invalidation of this downward channel, right? So if we start breaking below this, obviously we have to change the tune here, because there's really, 2 directions where this thing's going to go. Obviously, right? It's going to be up, it's going to be down. But the reason why it's pretty challenging to know is because how much uncertainty there is, as far as the election goes, as far as the whole world, right? The whole economy and everything. And then also other things, right? So I think, you got to be macro bullish, because we have to realize the system we're in. It's a fake system, and crypto is basically highlighting just how more fake it actually is, right? I mean, think about Bitcoin, for example. This thing is one of the greatest assets of mankind as far as profits go. I mean, this thing literally started at pennies, right? I mean, this chart doesn't go as far back. I got to look at the index, but this thing, just look at it. I mean, it went from pennies all the way to $70,000. I mean, if that doesn't tell you that there's something wrong with the fiat system, then I don't know what does, right? If you're seeing multiples upon multiples upon multiples exceeding any sort of incomprehensible situation, right? I mean, this thing is just insane. Think about it. So what does that mean? It means Bitcoin's the greatest thing, and Bitcoin's this, and Bitcoin's that, and and it's the greatest. No, it's great, but the reason why, it's because all Bitcoin is a mirror. That's all it is a mirror. It's a reflection of a dying system. Again, we don't live in a people system. We live in a central banking, fiat currency, debt-based, deep state enslavement system that has been sort of working its way and doing what it wants for the greater good of itself by making you work harder for longer for less. And what does that mean? It means the value of which we work for is decreasing. So if let's say I build furniture or something, right? And I build 3 dining room sets. Okay, well, 3 years ago, I'm getting a specific value. Let's say it's, I don't know, $4,000, $5,000. We'll say 5 because it's a round number. And now today, I'm still getting that 5,000, maybe a little bit more. Maybe I'm getting 5,500 now, right? But the value that I hold is actually less than when I started, right? So a guy making $2 an hour decades ago is actually making more than a guy potentially making $15, $20 an hour today, right? And then you see that, and then you see this. The writing is on the wall, which is what? Well, which is obviously the fiat currency system doesn't work. If you look at through history, fiat currency systems, they all go to zero eventually, right? That's why we see the stock market continuing to rise. Yes, there's going to be big pullbacks and big take profit areas, but the overall macro trajectory is up, 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 right? So sometimes people retire just as a big depression or recession or market crash occurs, like my grandpa did back in 2008, 2009. He basically lost almost everything, right? I mean, pretty much, as he was retiring, right? So he built up that retirement for 45 years. He worked at a steel company, and he actually worked for Kaiser Steel, and which is now CSI, California Steel Industries, which had a great job, decent income, right? A nice 2-story house, right? A car, couple dirt bikes, right? And living fine. Then he gets to retire, and then bam, he gets hit with the 2008 financial crisis. So obviously, it's a lot of people's responsibilities, right? Like, if you know you're going to retire, why is your risk or your exposure to the stock market that high, right? Because most people, like my grandpa, many other Americans, they don't really take the time to look at their investment situation. They don't look at the portfolio. They don't look at they just let the guy, the financial advisor, quote unquote financial advisor, right, tell them what to do. And usually, most of the time, I would say it works out pretty well. But if you're retiring, right, you don't want to be having to deal with that. So when you're young, and I'm going to get into this with Bitcoin, and you're going to see what I'm saying here. When you're young, you want your risk exposure to be extremely high. Why? Because you can afford it with time, right? As you age, that's when your risk should start going down, obviously. So we don't want super high risk when we're getting ready to retire, or even, depending on the situation. So obviously, if we're in a massive depression, you don't want to be taking a lot of risk to the long side, right? So you got to understand the market condition alongside your age. But the whole point is, when you see everything going up cohesively together, Bitcoin, the stock market, gold, I mean, look at gold, right? Silver, precious metals, groceries, gas, it's going up. Why? Because the dollar's going down, which means we got to pick things that's going to retain our purchasing power, because that's what it's all about. Money is money is money. It doesn't really mean anything unless the money has value, right? So if I'm looking at things that are going up in value, then I know that said thing is retaining its purchasing power. It's actually exceeding its purchasing power because it's against the dollar, right? So for example, really Bitcoin's not going up. It's just the dollar's going down. You know what I mean? So that's the situation we're in. So knowing all of that information, we have two ideas. The first idea is we're going to break to the upside. This is a 1, 2, 3, 4, and we're going to get 5. Perfect. And then we get hopefully an alt season, right? The other idea is this is a little bit more complex of a fourth wave, and we have to break the low. We have to come down maybe to 40 to 47K area, right? And then we get the fifth wave. So that's one bullish idea, just two different variants of that idea. The next idea is we're not doing any of that because this is not a expansion wave, but rather this is a retracement, right? It's a retracement that actually tricked a lot of people. Why? Because it didn't go up like 2019. So look at 2019 here, and you can see, and that's what the market makers like to do. They like to keep people guessing. They want uncertainty, right? Because the more uncertain there is, the more people, right, the more opportunity there is. So for example, 2019, we had a retracement, but it didn't break the high. So if we're looking at this cycle, we're not comparing it to 2019 because we broke the high. It's not a retracement anymore. We have an all-time new high. We have a new all-time high, right? So it doesn't matter. So it's clearly different than 2019. And I would say, I wouldn't say that it is. I would say they have more in common, right? Or I should say they have a lot in common, right? Until this actually clears from the all-time high. Just because it poked above it doesn't mean it expanded. Poking above it is one thing. Actually breaking away from these two highs, that's a completely different situation, right? So this is a retracement. If this bear scenario occurs, then that means this was a retracement, which means what? which means what happens after a retracement? We go into, we come down, obviously, and then we go into reaccumulation. We go sideways for a little bit, and then we break out. So we have a rise, we have a crash, we have a retrace, we come down into reaccumulation, we go sideways, then we break out. So if that's what's happening now, then we can say, okay, this is a rise, this is a crash, this is a retracement that broke the top. Now we got to come all the way down, I would say between 30 and 40K, maybe a little higher. It really depends. It's probably going to oscillate in a range up and down like it has many times before, even when you look at XRP. And then what it would do is basically go sideways and do what? Keep people guessing. So I want you to imagine the investor's psychology right now. If he's already kind of bearish because it's taking so long, and I agree, it is taking a long time, and I'm right there with everybody. But hey, it is what it is. But if that individual is already kind of bearish, and then we break down all the way below 40K or at 40K, that person is now going to be extremely bearish. And then what happens when they're extremely bearish is they're like, okay, I want to sell everything. So what they do is maybe they sell down here, right? And then people who are looking at this from a bullish perspective as well, and then we break down, they could also flip from being bullish to now bearish. But actually, when you look at it, kind of in some examples both are wrong. You want to be getting bullish, right? So it's kind of like interesting. You break to the downside, it's an extremely bearish move, but guess what? The bearish move is over, right? But then it goes sideways, and then people automatically assume that it's going to continue. Just like how people automatically assume that this is going to continue, right? And me and myself included, right? So what I'm saying is it comes down to really two ideas. And the point, what I'm saying is, if this does come down, which I don't think it will, I think this is a 1, 2, 3, 4, 5. Even if we have to break a little bit lower for this to be a fourth wave, a more complex fourth wave, right? Then we can still get that fifth wave. But if it completely breaks down and loses a lot of support in that 45K area, right, then we're probably going to backtest this low here, or this resistance, which is now going to be previous support, or previous resistance, which is now would be current support. So I'm thinking, right, if we do come down here, and what I'm saying is imagine yourself or the common investor, what are they thinking from there? Because you kind of always want to plan ahead. Because the reason why you want to play these scenarios out in your head, and the reason why my videos are a little bit longer, is because I'm playing these scenarios out. Because when you play it out in advance, your psychology of approaching it is a little bit different. You know what I mean? So, because if you're in the situation, like if Bitcoin breaks out, and it's 80K, right? Brand new all-time high. Then it goes to 90K. You're not thinking as clearly as you would when the markets are boring and you're more thinking rational. You see what I mean? So you look at it from a different perspective versus actually being in the crash or being in the explosive move, right? So that's what I'm saying. If we have the explosive crash, your emotions are going to dictate your reasoning. But if we think about it in advance, maybe it doesn't happen, but that's okay. But at least we're prepared if it does happen. If it does happen, right, then we can be confident in ourselves that this is reaccumulation, because when it happens, if people are expecting it to break out and then it breaks down, they're not expecting it, right? So it's gonna be a lot of fear, right, in the market, and they're gonna be consumed by fear. What consumes a person more, fear or greed? Let me know in the comment section. But anyway, I think that this thing, if it does break down, we have to be aware that this is reaccumulation. That's all I'll say about that. So again, this right here is the inflection point, right? So, and I think people are aware. And here's another thing. If we do break down, what are people going to think? Oh, I would say it really depends. If there's an event assigned to it, like a black swan event, a cyber attack, a stock market crash for some reason, right? I mean, whatever, like it was for C19, people were, they wanted to sell everything, right? So at the end of the day, I think it kind of depends on the situation. But let's say it was an organic sort of breakdown, people are kind of caught off guard. Okay, well then there you go. But for me, I think that fifth wave is coming. So, and really the reason why I believe that is because there's nothing that is telling me right now that we should break to the downside, right? We had this gorgeous doji candle here that got bought up real quick. We have sort of these two equal lows, right, coming in here, right? And then we also wick through it. So this is a bunch of liquidity right here, and this candle tapped into it, right? You can also see this trend line here, right? And also it's kind of like in a bull flag. So, and we're holding support, and the altcoins, they look definitely like they should be going up. I mean, look at that pullback. I mean, that thing came right back to support. It's building a base. We're on a 2-week 9 buy, right? Or we just had it. We printed it. So, and now look, we're 1-2 candles ahead, right? So this thing, I think, is building a base, and it's going to start its ascent, its retracement back up here. So I could be wrong, but I don't think so. So unless, again, some types, we don't really know, right? If some type of big event occurs or whatever happens, then whatever. But for me, I think we're going higher. So let's jump into the smaller time frames. Until something can prove to me that we're going lower, I have to assume we're going higher. Yes, we've been in a downtrend for quite some time, but that only just increases the probability of a retracement, right? Because if we've just been pulling back for the last 2 weeks, we probably got more time. But we've been pulling back all freaking year, basically, right? I mean, we've been going down all year in altcoins, right? So basically, so we have March, April, May, June, July, August, and now September. So that's 7 months, right? We've been going down for 7 months, more than half the year, which means, and okay, so that's number one. And then we're also right at support. That's number two. And then we also have the correct amount of waves to the downside, right? You can look at it as a 7-wave crashing structure. 1, 2, 3, 4, right? And then we have 1, 2, 3, 4, 5, 6 rolling back up, and then 7. That's a completed crash, right? And when we were in that crash, I basically said what I believe is going to happen is we're going to come up and we're going to flag out. Now, the flag doesn't look as good as I thought it would, and maybe we're not at that flagging out area yet. We could still, this could still be a 3 up, a 3 down, right? And then another 3 back up, and then we flag out up here, right? And I was actually using the bull market support band for my guidance. There we go. So let me clear that up a little bit here. So yeah, we have all those elements, right? And then we also have Bitcoin in its fourth wave. So there's a lot of probability, right? And also we just had a daily 9 buy come in not too long ago, right? And that 9 is, like I said before, was activated. And now look at the reaction as we're breaking those red dots, right? So when was this 9? This was September 4th. So go check out September 4th THETA video that I put out talking about this 9, right? And now this 9 may have played out, maybe it didn't play out. But the reason I gave it a chance to play out was, number 1, it's a beautiful doji. Number 2, it's a perfected 9. Number 3, the 9 actually came in and tapped below this liquidity, and then it got bought back up. You can see we actually had 2 red candles after that kind of took out the low. That's okay. That's okay. But look at the reaction now. You got 4 mega candles breaking above, activating the 9. Now this is just a short-term situation. This doesn't mean it's going to go up, 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 up forever, right? It's short-term. So basically, when we were down in here, I'm looking for a retracement. So once we get to that retracement level, then we reevaluate, right? But as of now, I have a sneaky suspicion that because of the way these candles are looking, that we're going to break above the retracement because it's not going up correctively yet. On the daily chart, it's going up rather impulsively. Okay, so if we can get up here a little bit more, maybe flag out a little bit, and then break out, get to the retracement levels, right? And then hopefully break out again, and that would be a 1, 2, 3, 4, 5. If we can get 5 up, and we can get into that, you know, bull market support band right here, and hopefully, I don't think we will break it on the first one. I don't. I think it's going to take a little bit of time to break it, just like it took a little bit of time to break below it. So once we get up here, you know, hopefully we can, I would say this is 3 up, right? We came down, and now we're getting, hopefully we're getting 3, or actually hopefully we're getting 5 up now. So if this turns into 5, then this whole thing becomes an ABC. If that becomes an ABC, well, it's still not over yet, because if we continue to go higher, a little bit higher, right, after correcting in here, and then pull back into the bull market support band, I'm going to look at it potentially as a 1 and a 2. Maybe it could be a diagonal, right? I mean, there's a couple different ways it can go down. But yeah, I'm looking for it to get in here and start to flag out. So that's kind of how I'm thinking it today, right now. So also we have, I took this screenshot yesterday. We have a potential inverse head and shoulders here, right? So that's another thing. And this was $1.18. Now it's $1.21 right here. So you know, that's pretty decent right there. So now I think it has an even greater probability at this being some sort of inverse head and shoulders, how we're cupping up into that resistance. We also have the bull market support band. If we can break through that and then hit the bull market support band, correct a little bit more, and break through that, it's going to be a lot of work, but then we can start, and then we come down and we flag out on the bull market support band, and then we continue our mega pump to the upside. Similar to how over here where we caught the bull market support band, and you can see we sort of built a base in here. I was just looking outside, and I was talking about the video, and I got distracted. I'm looking outside, and it's like red, like the sky is red, like the sun is coming through the smoke from the fires. I'm like, is there a fire? And I googled it, and there's like a bunch of fires going on all over the place. So I don't know, maybe one of these fires is near me, and but yeah, I was like inside my house on my phone, and all of a sudden it got dark, and I'm like, what the heck? So I opened the blinds a little bit more, and it's like dark outside. So just got mega distracted from that. And then I looked up here, fire near me. So man, crazy time. But anyway, sorry about that. We were developing this base here, which led to this rally. That's what I'm thinking here. We're going to develop a base on the bull market support, but we have to break above it, right? And then we can be on our way to the upside. And that's what I'm thinking here for the bulls. Now, how do we know if this doesn't work out? Well, first of all, we're going to know if we get rejected here. If we come up here to these two lines and we get rejected, we come down, and then we break this low, right, over here, then we're obviously going to think differently, right? And then we just reevaluate the situation. Obviously, if we did something like that, I would think we have 1, 2, 3, 4, 5, so that would be A. And then I would think this whole move right here is a B wave, and that would be B. And then we would need 1, 2, 3, 4, 5 for C, right? And maybe come down here, which would kind of make sense based off the Ethereum fractal, right? So just imagine this coming down. So we have a W shape, right? It would be a W shape. We could still get a W shape now and just be at a higher level, right? But if we broke down, it would really look like a pretty clear W shape, similar to what Ethereum did. Let's see, where's Ethereum at? Right there. So we come down, right? We have this W shape. So yeah, I think you could notice Ethereum came down. It had a decent bottom, came back up, and then it came right back into that bottom. So bottom 1, bottom 2, higher low, right? Low, higher low. So thinking about theta in that perspective, I mean, you can see it pretty clearly, right? We have our low, we come down a little bit more, right? This be an ABC or ABC, something like that. And then here's your low, here's your higher low, and then we go up. So there's your W shape. So, it's like I'm a macro bull. Either we're going to go up now, or we got to come down, we got to go up later. But no matter what, I believe we're going up. And that's why we should be completely positioned to the long side, as I was discussing earlier. But again, not financial advice. I could be wrong. We could go to 0, and that would be the end of it. So there's always that risk. But if we look at the situation, we can determine that it's best to be anti-dollar, anti-fiat. And that's paid out since the beginning, since the fiat system was created back in 1913 when they created the Federal Reserve, right? But anyway, let's look at XRP here. So XRP is giving me the warm and fuzzy feeling because we've officially landed on the bull market support band, and look what's going on. Look what's happening. We are back testing it right now. So that's a very positive thing. You could say, well, we back tested it over here, we fell through. We back tested over here, we fell through. Well, we got to ask ourselves, well, what was it doing during that time? Well, back then it was part of a B wave, right? So if this is A and this is a B and this is a C, okay, then we have a completed A, B, C. We have a completed three-wave move. And if that's the case, then what is this? Well, that looks like a 1. That looks like a 2, right? And now it looks like we are correcting into this bull market support band. So a closer look, we can see in my opinion, a gorgeous three-wave move. I mean, we got 3 down, we got 3 up, and we got 3 back down. So if this is a 1, like we were just saying, and this is a 2, it's a weird shape because it's in the shape of a flat, and it's going to keep people guessing. And the most important thing is, and you can say, well, what if it's not that? Well, even if it's not that, we still have this three-wave move here, right? So if we just ignore the other moves, I mean, just look at that, right? And remember when we were talking about Fetch in the beginning, if I can find it real quick. Remember Fetch. Look at that three-wave move there, right? I mean, that's textbook right there. Perfect. Okay, so that's what we're looking for. So if we go to XRP, right? There it is, but it's way bigger. It's way bigger, right? So is it bigger? Let me think. Let's see. This started in August 8th, and this one was... No, August 8th was the beginning of this wave here, right? So this three-wave move is way bigger, which means it's going to take more time to break out. But if you see what Fetch is doing, it's going up pretty strongly. So, you know, this is... I just can't get over the shape. I mean, look at that shape. I mean, I just can't get over it. And then where is it leading to? Right? We're on the bull market support band, right? I mean, this is like perfect. So could we go lower? Yes, we could. And what would be the argument to say that's the case? Well, I don't like it at all, but this would be a 1, 2, 3, 4, and a 5. But look at the size of 2 and look at the size of 4. It's getting out of proportion. It could be a broadening structure like this, of course, right? It can be a broadening structure like that. And that would be sort of a kind of a diagonal right there to the downside. So that would be a little bit challenging, but I would think some kind of three-wave move down. Some kind of A, B, C to the downside. Right? You got 5 here, and then you got a B wave, the connector for the middle, and then you have this broadening wedge. So that would be the downside move. And if that's the case, then okay, we come down here, we build our base, we make an attempt to break to the upside. Because again, we even if we did come down one more time, we would still have that three-wave shape. It would be a little bit extended. Let's see, where's the extension right now? I believe it was at the 1-to-1, or no, the 1.414. Look at that, it perfectly nailed it. So yeah, we could hit the 1618, I guess, but we'll just have to wait and see. So if we look and zoom in a little bit closer, is there any indication that tells us that this is bottomed? Almost, guys. Look at this. We almost have it. I mean, right here we did, right? We had 1, 2, 3, 4, 5. And look at the three-wave shape it created after that. And I talked about that a lot. Let me get rid of this. This three-wave shape here. Beautiful. and that was a good opportunity right there. We had five. We just got through a big dump. We had 5 waves up and a 3-wave pullback. I mean, that's what we dreamed for. And then what happened? And then we went up again. 1, 2. Looks like 3, 4, 5, or even 1, 2. 1, 2, 3, 4, 5, 4, 5. Or actually, you know what? It's a diagonal, probably. We have 1, 2, 3. This looks like 4. And now maybe we're going up into 5. So here's what I'll say with XRP. If we get another break to the upside, that's going to be a confirmed 5-wave leg. 1, 2, 3, 4, 5. If we get 5 waves, that means that this wave, or the current wave that we're in to the downside, right, which is this wave here, that means this is a reversal, or at least it means the probability of it being a reversal is significantly higher than if it wasn't. So I would look at it like an A, a B, and a C, right? And now this is 1, 2, 3, 4, 5, and then we get up here, right? You can see all this resistance up here, and then what do? Maybe we have a shoulder, maybe we have another shoulder, right? Or maybe we're flagging out. We go 1, 2, 3, 4, 5, flag out, and then break to the upside. And that's what I believe. If we can break above this high here, if we could break above that high. So if it's not that, then what else would it be? Well, basically we would have our retracement level right here, and we would look at it from a retracement perspective. We're in the golden zone right now, right? So we're right there in the golden zone, not too bad. So I would like to see the price get above the 618 and the 702. But I'm saying if it doesn't, if it gets up here and we get rejected in this area, right? So for me, we have 1, 2, 3, 4. If we get up to the 702, this is going to be a 5th wave, right? So if we would get rejected, I would say we would have to get rejected now, somewhere below the 618, this high here, right? I mean, it could be the fact, though, that the 3rd wave isn't finished. If this is not a diag, so for example, we have, let's say, a 1, a 2, a 3, a 4, and now we're coming up for 5. So that whole thing is the 3rd wave. So this is 1, this is 2. All of these 5 waves up here are 3. Then we get 4, then we get 5. So instead of this being 4, right? So that's another thing too. So again, I would just take the retracement here. And if we can break above the 702, 786, above 55 cents, I think it's going to look pretty good. And then what I would expect from there, right, if we can get up here, is a correction, some kind of correction here, right? Get up here, correct, and then continue to break out. But if it doesn't, then what would it be? Well, then we would look for a break below this low, 52 cents, right? If we break below that, we're going to be breaking below the 2nd wave, which means this was only a 3-wave pullback. So we have a 1, we have a 3-wave pullback for 2. We have a 3, we have a 3-wave pullback for 4. Maybe it gets a little bit higher. And then we get 5, and then that would be 1, 2, 3, 4, 5. Okay, and that would be some kind of some kind of diagonal here. And then once we get down here, I would look either for a bigger retracement or a base and then a breakout, right? So we just have to wait and see how this plays out. But yeah, it could be, I like that drawing actually. It could be a little bit bigger, because if this is an A and this is a B, then we want 5 waves in wave C. And right now we don't have 5 waves, but it could be a WXY. We could only have 3, right? So if this is 1, 2, 3, 4, and 5, then we need another low. But if we got that low, that's the time I would be very bullish, and that would be around that 48, 47 cent area, somewhere down here. That would be, I would definitely take a stab at that, because then you have a completed 3-wave move. Could the 3-wave move be finished now? We're going up, yes. Or we have a 3-wave move and it needs another low, which would make sense, because if this is 1, 2, 3, 4, 5, obviously we need another low. So what's the best way to do it? Dollar cost averaging. A little bit now, a little bit later. Always works out best that way. Because I'm looking at this as a 1, 2, 3, 4, 5, right? And this is a big 3-way pullback here. I mean, look at it. And this thing's about to mega launch. That's what I'm thinking here, and that's what it looks like to me. Now, we'll change the mind if we start, if I take a retracement from, if we get one more low and then keep going down, right? I would take it anything below 47, definitely 45. I would actually take it to the bottom of this here. So really, if we break this low here, so as long as we're above that, I say we're doing okay. All right, so is there anything else? I think that's it. Check on Bitcoin real quick. Look at Bitcoin here on the small time frames. We have a 5, almost, hopefully, a 5-wave shape here. We have a 1, we have an ABC pullback. This looks like a 1, 2, 3, 4, 5 for a 3rd wave. Let's come down for a 4, and then let's come up for a 5. Now you could say 1, 2, 3, 4, 5, but it looks too small. Or maybe it is 1, 2, 3, 4, 5. I want to see it get a little bit higher, right? And it would make sense too, because we got this resistance here, right? Maybe we have a little bit something like this going on. But yeah, I'm looking for it to start flagging out in here, and then getting a little bit higher in the retracement levels. So I think that should do it for this video. Appreciate everybody for tuning in. I'm gonna go, I think I'll take a picture outside and show you how red it is. It looks crazy. The fires out here are just insane. Makes me wonder if they're purposely doing it in California to receive more federal funding, right? They start all these fires on purpose, So anyways, appreciate everybody. Remember, not financial advice, just a few humble ideas for everybody out there in the crypto land we all live in, that I believe we should stay living in, because if we go outside, it ain't gonna be so good. So anyways, I will catch you guys on the next one. Cheers.